How we doing out there, traders? I hope you guys are excited for another stock market movers. Right here, I'm your host, Money Mitch. I'm ready to get into it today. We got another great show planned for you. We're going to get into, of course, the ISM Manufacturing Index coming out there at 10:30, construction spending. We'll talk about Micron, Kohl's, Meta, FDA earnings coming on up. And of course, also recession concerns. There's a lot to talk about today. We'll get into it. And of course, we got our expert with us today. We don't got two. Normally, we have two on this show. I know I'm apologizing for that in advance, but I do got a great one for you, an expert in commodities. We'll get into it with none other than Gilbertie, president and founder and CEO of Teucrium Trading. Super excited to get into that. They have plenty of ETFs in commodities, so you guys can take a look at that. Stay tuned for that. That's going to be coming up at 1:15. We'll get into it with Gilbertie, so stay around for that. And let's go ahead. Let's dive into today's action. You guys see the topic scrolling below. Hit the likes, and let's go ahead and get Money Mitch started.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market is here to stay. Money Mitch.
What's going on, traders on out there? You guys are probably stuck in the chop, and I can't blame you because I'm stuck in the chop also. It's just been hard trading action on out there, but we'll get towards the headlines. That's what this show's about. Start us up with a thumbs on up. Let everybody know, hey, tune on in. Stock market movers is going on. Hit the share button down below. We're going to talk about commodities coming on up around 1:15. But until then, let's hit some headlines and see what kind of economical data that we get today. If you guys are taking a look at, of course, the SPY today, you'll see some down action probably after around we got, of course, 10 a.m. number there, 10:30 coming in there, and then seeing some bounce there, but we're still in a little bit of a chop zone here. I'll take a look at the overall market, and you guys can see here we've been in the chop between the 373 and the 380. I'm really watching to see if we can come out of that range, but for right now, looking like the SPY wants to stay in kind of this trappy zone right now. We'll see if this can happen. We did get USA ISM manufacturing numbers coming on in, and definitely weaker than expected here. Definitely not what we wanted to see. It came on in here for June at 53 versus the 54.9 estimate. Prior was 56.1. This is the lowest reading since June 2020. And ISM new order index also fell to 49.2 from 55.1. This showing the contraction here for the first time since May 2020, just showing us more concern about really the macroeconomic headwinds that are out there right now. U.S. construction coming in here, spending month over month, May at 0.1 loss versus a 0.4% estimate. So what does this show me more and more? That we're falling off here. And it just shows us also the slowing down probably in the housing that we need to look out for. So if you're looking at the housing markets, I think we're going to still continue downfall. Of course, with the Fed also mentioning more basis rate hike points coming up. We'll see what happens there. I did want to take a first half recap. I've talked about this on pre-market prep. So if you caught this on pre-market prep, maybe this is not the first time you're hearing it, but let's go ahead. Let's get to it. I think it's important to talk about the first half recap. At first, it was all about the Fed and whether it was transitory or not. And then that mindset started easing as inflation kept rising. And then, of course, Russia's attack on Ukraine didn't help matters. And, of course, energy and food. We saw inflation really tick on up. Shoppers' confidence now really starting to turn around with all this inflation and has tanked on the expectations that we're not seeing inflation slowing down here. Inflation on the CPI was running at 8.6. This is the highest since December 1981. Yes, I said it all the way back then in 81. I don't know about you, if you guys were around. I know I wasn't around then. But Fed Chair Jerome Powell also kind of getting up to speed here a little bit, talking about how he needs to regain control of the inflation narrative. Of course, a lot of this coming from the beginning talk of what? Transitory. And then what is there some other things that we saw out in the markets, right? We saw the SPACs fall off a cliff. Let's just be honest. IPOs falling off a cliff too. It wasn't only SPACs. It was also stocks like Coin and Hood that you have been seeing. Rivian just keep coming on down here since their IPO. And what did we also learn? Crypto is not an inflation hedge. I think some people were thinking and calling this kind of like if you should go for crypto or gold as the inflation hedge. Well, it definitely wasn't crypto, and it probably wasn't gold either. At least from what we've seen, we haven't seen gold sustain the prices higher as inflation has really taken off. And I thought finally we would have seen that at least in gold taking off, but also not the case. Another thing to keep in mind, right, is after the SPACs fall and the IPOs fall, what else did we get? Well, we got continued downside actions, right? The NASDAQ down 30%, Dow Jones average down 14%, S&P down over 20%, and Bitcoin down over 50%. What does this show me more and more? How we need to keep watch of the macro headwinds that are out there. First quarter GDP contracted by 1.6%. And we'll talk a little bit later about what the Atlanta Fed Reserve GDP Now tracker is pointing to. But all this coming in the first half of pretty much one of the worst years in the market, period. I mean, it's been a really tough environment out there with inflation taking off and all the spending, of course, didn't help that we had that Russian situation. But we'll continue to watch. And what did you guys see coming into the end of the quarter? Of course, some window dressing, right? I think it's important to kind of take a look at what window dressing really is. That came in at the end of the quarter yesterday. And what happened here? Of course, funds tried to improve their performance before presenting it to clients and shareholders. The window dress is when the fund manager sells stocks of his largest losses, of course, right? Get rid of those. And purchases high-flying stocks near the end of the quarter. A lot of the times they probably have a little bit of that high-flying stock. Maybe they're a little bit underweighted and they want to make themselves overweighted to go ahead and make it seem like they were doing better in that process. Another thing that you could have seen is funds talking about how they had such and such cash on the side. That can also be some kind of window dressing here, as you're seeing, of course, mentions of what they wanted to say that, hey, we weren't going crazy in this downturn. You know, we kept a little bit of cash at bay so that we could add it back into the market. Of course, we'll continue watching what comes out of these reports. One of the things that you can do, though, to get around kind of the window dressing is really look into the filings. And that's going to help you really find which one of these funds we're trying to play a little bit of those games there. And, of course, make the fund's performance look a little bit better there. All right, let's keep going. Let's take a look. Of course, earnings season is going to be coming on up. So keep on watch what we've been talking about right here on Stock Market Movers, which is what? Of course, watch for revisions to the downside. This will continue to show us that we're in a bear market and that we're maybe in the middle of the bear market. I don't think we're at the very beginning anymore, but I do think that we're kind of like moving towards inning 4 and 5. And so we need to kind of keep on watch how quickly this kind of continues to go into the wrong way. We don't want to see companies continue to knock down those earnings. One thing that it will help is kind of pre-announcements. I think you're going to see a little bit more of these. And what are these? These are the company's attempt to lower that bar before the earnings so that by the time they report, they can raise it right back up. And so a lot of things that you need to ask yourself, is the price kind of being priced in, right? Are these pre-announcements really trying to kind of knock down the stock and get it to a level to where the earnings can come in and raise that right back up? Something definitely to keep on watch. We'll see what happens there. Definitely smash the like, Quentin. What's up, my man? How we doing? It's good to see you guys in the chat, Lord Byron. and of course, Easy, Hodo, Zoen, of course. I see you guys. Appreciate it. Hit the thumbs on up if you guys are enjoying today's stream. And of course, let me know what you guys want to talk about if there's a topic you want to touch today. All right, let's keep it going. Let's go towards Micron here. Of course, MU, you guys can take a look here. Disappointing guidance. And like I said this on pre-market prep. I think it puts the semiconductors on high alert here. But let's take a look here at MU. You could see here that decline coming from yesterday's close. Now we're looking like we're down about 5.7%, but it didn't only affect Micron. One thing that it did see, though, it changed its guidance here. It changed its guidance here for an EPS of $1.43 to $1.83 versus $2.62 estimate, and sales of 6.8 billion and 7.6 billion versus a 9.05 billion estimate. Definitely something to keep on watch as you're seeing Micron take down some of these semiconductor names. Let's take a look at some of those in here and how did those perform. Some of the big ones, right? Like NVIDIA down 4.7%, TSM down 6.3%, AVGO down 2.8%, Intel down 3.45%. I also saw some other news out there with Intel delaying. We'll talk a little bit about that. QCOM also down here about 4%. You're seeing AMD down about 4.29%. And man, AMD has had a really tough week here. This is coming from around the 89 levels down to 73. We're down almost about 17% there in just AMD alone. So definitely watch out, guys. You guys are seeing the semiconductors definitely turn around there. And we'll see if they can bounce back. But right now, it's not the case, right? Micron down there, it went down to 49s. We'll see if this continues coming on down and gets to those pandemic levels. It wasn't only, though, where we're seeing concerns, right? And then we can talk here. We can shift on over to Kohl's. We'll get into Kohl's right quick, and then we'll get, of course, to our first interview. Let's talk about Kohl's here. And they're announcing Friday that they're terminating their talks to sell here. Let's take a look at KSS and how it's trading on the intraday. I'll put up the chart here. And then Kohl's, of course, on Friday announced that it's terminating the talks to sell. CNBC was the one that reported late Thursday that Kohl's no longer planned to sell its business to the Vitamin Shop owner. And it just doesn't look good here. You guys can see Kohl's definitely coming on down, but it wasn't just this stock, right? It was a couple other ones too. You can see in the industry what happened. Macy's down 2.18. You got Dillard's down here about 6%. Another one that I was going to take a look at, JWN, Nordstrom down about 2.3. And then, of course, just keep on watch other names. You could see some continued weakness come from that KSS. They're warning about what's going on out there. It just doesn't seem like the best retail environment. Some stocks have been okay, but a lot of them have put out like pre-announcements like Target did. And we're going to have to continue to watch to see if we see continued downside. All right, like always, guys, what this show's about is trying to keep us in the informational edge and, of course, get to our experts. So coming on next, we will go ahead and dive on in here with Sal Gilbertie, founder and CEO of Teucrium Trading. Let's go ahead and dive on into that. First things first, we're going to play a little Benzinga Pro, and then we'll go ahead and get him on.
Introducing portfolio synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, traders, let's go ahead. Let's bring on here my first guest here, Sal Gilbertie here, the president and founder and CEO of Teucrium Trading. If you guys want to check out some of these ETFs, I definitely tell you guys to take a look. I love that he always has it in his background too. You guys can see it there. Corn, soybean, wheat, cane. Check some of these out. We're going to go ahead and start diving on in. But first, wanted to say thank you for joining me, Sal.
It's always a pleasure to be here. It's good fun.
Definitely. First thing I want to do is start off right off the back and give you guys some props because as you guys can, and you guys investors out there, I'll tell you guys to take a look at that 2022 grain outlook that you guys put in the beginning of the year, where you guys were stating that you were expecting inventories to build this year. Explain why this is the case, and do you still see this as the case in 2022?
Well, we do. And the reason is that high prices fix high prices in commodities, and farmers are planting as much as they possibly can. And so what's happened here is we've had a couple of years before the war. You had 2 years where, depending which commodity you looked at, corn, soybeans, or wheat, each of them had a 2 out of that 3-year period, different years during those times, where we actually used globally more than we produced. So you have a shrinking balance sheet. And if you just think about it, grains are an essential part of life. You have to eat them to survive. And they're used for fuel now. They're integrated into vital parts of the economy that people can't live without. It's kind of not optional to use these grains. And so if you have a supply disruption of any kind, or you have increase in demand, which demand has increased every single year, the combined use of corn, soybeans, and wheat since 1960 has either been a global record or the second highest every single year, bar none. And so, you know, because global population is rising, because uses for these things are getting more varied and growing, you see demand going up all the time, year after year. And crops are dependent upon weather largely. And then we had the war. So prior to the war, you had the balance sheet shrinking, and only slightly, but it only takes a little bit in order for people to get really nervous about there not being enough food. So that's why you saw prices kind of creeping up 2 years prior to the war. Once the war came, of course, wheat prices led the way with all that wheat locked in Russia and Ukraine. And you saw the tremendous outperformance of grains versus just about every other asset class out there.
Yeah, unfortunately, I don't think we could be like the dogs out there and go full grain free. So we won't be doing that. But one thing that I do want to talk about is that we have seen a little bit of a hard turn around in commodities. A lot of this coming in different areas. Let's focus first on wheat. We have seen it retrace from its highs in May. Now, why do you think this is happening? And is this just more of a correction, or do you see continued downside here?
Well, I think it's a little of both. I think that, number one, markets, when you have tremendous events like this, like the war, markets price in the extreme almost immediately. And so the markets priced in the total loss of all the grain in Ukraine and the total loss of all of Russian exports. We may, you know, the jury's still out. We may lose most of the grain in the Ukraine because they can't get it out. You have to get it out by ship. And, you know, people putting their hopes on rail and storage, and that's pretty much nonsense. It's not going to happen in enough volume or enough time to save that grain. But Russia's wheat is there. It can be shipped. There are no penalties for buying Russian wheat or fertilizer. The world knows that people need both those things. And so Russia can sell those things. They're not lost to the world. And I think everything calmed down. People realized that we had the maximum damage priced in. The maximum damage isn't going to occur, meaning we're not going to lose Russia's wheat as well. That will be available to the world. And so you see this retracement. You also have a natural seasonal retracement in grains. Every year, as the Northern Hemisphere's planting season ends and you get into growing season, which is right now, the thick of it, you tend to see grains stop moving up because it's a seasonal tendency where people aren't nervous anymore. The crop's in the field, they can see it growing, they're a little more comfortable. They come autumn, we'll have enough supplies to replenish what we've used over the prior year. So we're seeing a seasonal decline. The highs may be in. They may indeed be in. I mean, we could have drought. Much of the Corn Belt is experiencing drought. The next 4 weeks are really critical for rain in the right places, or you will have reduced yields in the Northern Hemisphere. And that's a very big deal and bears close watching. But by and large, I think the panic buying that brought us to the highs that we've seen, you know, multi-decade highs in essence, I think that's done with.
Something to keep on watch. We'll see if we get back to those May highs. But now let's shift on over, of course, to the Russian invasion and what's going on here. I think the important question, of course, is will Russia continue to kind of blockade the Ukrainian grain exports here as a bargaining chip and continue to use kind of the situation that's going on here to try to continue to get some of these sanctions back? What do you think?
I think they will. They have no intention of letting Ukrainian wheat out. That would strengthen Ukraine. It's virtually impossible right now anyway. If while we're speaking, the leaders of all the countries, including Russia and Ukraine, announced that a deal was reached and they're going to release all the grain, it will take them months to demine the ports where they're shipped out of. There's a lot of damage. The Russians have actually bombed some freight elevators and grain elevators and grain processing facilities there at the ports. You're going to lose last year's crop, which is there. This year's crop, which is being harvested now, they really don't have anywhere to put it. Ukraine is in danger of losing much of last year's and the current year's crop. But again, Russia's having record or near record production. They supply, they're the world's largest wheat exporter, and they have plenty of wheat to export. So I don't think Russia's going to let go its grip on Ukraine. I wouldn't count on anything coming out of Ukraine in volume at all. It's just a myth.
All right, let's continue going. I've been hearing about a looming soil shortage. At least I'm not the expert here. So let me know, why is this important? And are you also seeing a soil shortage?
We talking about fertilizer or soil condition?
It could be a little bit of both here. Let's talk a little bit about what happened with fertilizer, but I'm also just hearing about mentions of shortage here, and I'm thinking it's quality, of course. So what do you see here, Sal?
Sure. Well, modern agriculture is basically based on producing enough via fertilizer. And about 100 years ago, they figured out the technology of how to produce nitrogen fertilizer from natural gas. And that really has kept production, has allowed production of corn and the big grains to keep pace with global demand, which has been tremendous and growing, as I said earlier. Russia is the world's largest exporter of fertilizer. And when the war first started, people didn't think any fertilizer would come out of Russia. Again, fertilizer prices really went up. You had some farmers holding back on the amounts that they would use. South America is really, truly dependent upon Russian fertilizer supplies, especially Brazil. And Brazil feeds the world. Brazil and the United States are who feed the world, literally, along with Russia. But in terms of corn and soybeans, it's Brazil and the United States. And if Brazil doesn't get enough fertilizer, you could run into a production shortage. And that, soybeans are a very big deal. They're the tightest of the big grains right now, but soybeans actually require the least nitrogen to grow. Corn requires the most. And so I think for corn growers around the world, they're using their fertilizer sparingly. More important, they're using their pesticides sparingly, because the price of everything went up, and farmers are productive and work hard and are frugal. And if they hold too much back on their pesticides, you could also have reduced crop yields. And the last thing we need this year is reduced crop yields. We need to replenish supplies of crops around the world, especially soybeans, and we need wheat that's not grown in the Ukraine to be grown elsewhere, so that it's freed up for people to use. So it's really important that the whole balance of supply and demand is basically hinges upon yields, and yields hinge upon use of fertilizer, use of pesticides, and number one, weather. We'll have to watch the weather.
One thing that I have seen is, and it's mentioned around, is that there's some seasonality sometimes, right, coming into play also. With you can take a look at U.S. corn and soybeans. A lot of the times we get kind of a peak in late spring and early summer. Why does this happen, Sal?
Again, that's because people will start at the beginning. Start at the end of the prior year's harvest. You generally catch your seasonal annual lows around October 1st. The first week of October is when grains, particularly corn, tend to bottom. And why is that? That's because the northern hemisphere has completed or is in the midst of its harvest. About 2/3 of all corn in the world, just using corn as an example, is grown in the northern hemisphere. And remember how crops work. You plant them in the spring, you wait all summer for them to grow, and you harvest them in the autumn. Now you've got a big pile. Just envision a big pile on the ground, and everyone in the world comes and takes a little bit of that pile. They have to take it all winter when nothing's growing. They have to take it all spring when you're just planting the next crop. They have to take it all summer while the crop's growing, and they're taking it until the next autumn's harvest is complete. And so you've got a whole year, and that's why people get really nervous. So everybody gets comfortable when they see the big pile at the beginning of October. And if you look at the seasonal spot price of corn, in the United States, you'll see that it gradually creeps upward. And if you look at long periods of time, 20 and 30-year averages, and we post some of those on our website inside of some documents, you can see them. And you see things go up sometimes 5 to 10% in the last quarter of the year. And again, it's a spot price. Then you're in winter and people are nervous. So wait a minute, we've been taken from this pile. How will our spring be? So it tends to go up again during spring. It tends to level off late spring and early summer. And right about now, again, as I said earlier, people get comfortable. You look out, you see the corn is knee high by the 4th of July. You believe everything's going to be fine. The weather forecast looks pretty good, and there's going to be enough. So you see that seasonal decline that generally lasts into August. They make an assessment of the crops. You sometimes get a quick seasonal pop, and then you have that decline back down until first week of October again. Grains are very seasonal, but it is priced into the futures market. Everyone knows it. It's planetary. It's literally a cosmic pattern. And so, it's not a secret, and it does get priced into the futures curve.
All right. Well, I went ahead and included that website in the chat there. If you guys want to just click on and check out some of these, I know that the insights here are really great to go ahead and dig into. So definitely check out the site. Guys, let's keep going here. Now, one thing that I'm sure everyone's trying to see is, will the prices actually come down and start showing some relief? Everyone's trying to focus on inflation. Can prices come down after seeing the recent relief, at least in the prices here?
It's hard to say. We're in an interesting spot with, again, grains. Grains have their own supply demand picture, and it's kind of tight. Soybeans are very tight. And so it depends upon this year's crop. It depends upon how much grain actually gets out of Russia. It depends globally, for the global balance sheet, at what point the USDA and other official organizations write off the wheat that's in the Ukraine and is not ever going to come out. And so all those things will be factors. But a lot of it is already in the market. The market prices a lot in, and it's forward looking. And so I'm not sure about grains. I mean, seasonally, again, we're in a little high. Historically, we're in very high territory. We're in the upper quartile of prices right now. And I think that as farmers continue to plant year after year, if we get good weather, it may take a couple of years. Sometimes it only takes one growing season for grain balance sheets to come back into line. That's not the case this year. It will take through this year's Northern Hemisphere harvest, through next year's Southern Hemisphere harvest, which is completed in basically, call it late spring in the Northern Hemisphere, and then probably deep into assessing next year's Northern Hemisphere crop, which again, we're still in the midst of growing this year's crop. So we think it's 12 to 18 months before we get good visibility of whether or not the supply demand balance sheets for grain will go back to what we've been accustomed to the last, say, 10 years. That said, where will grains go? The break-even price, which is kind of the natural place where grains head toward because governments subsidize farmers around the world. Using corn as an example, again, it was about $3.50 a bushel on the futures for years and years and years. We don't know what it is now because energy prices are what cause inflation the most. Energy prices, everybody uses energy to do everything. Farmers buy diesel to plant their crops. They buy propane to dry down their crops. They use natural gas indirectly by using fertilizer. And so as the energy complex remains elevated, particularly natural gas, that affects farmers' break-even price. And that's a very big deal. So you may see the floor on these crops be raised by 10, 20, some people are saying 40%. Only time will tell to see who's right.
A lot of decisions that's going to have to be made in the next couple of months. So we'll definitely probably have you back on, Sal. Thank you for joining us today. Sal Gilbertie, founder and CEO of Teucrium Trading. Check out those ETFs. I'll put them full screen one more time if you guys didn't catch them. Corn, soybean, wheat, cane. Check these on out if you guys want to go ahead and stay with Teucrium Trading. Appreciate you coming on today, Sal, and we'll definitely have you back. I know there's going to be a lot of action in the next couple of months.
Happy Independence Day weekend.
Appreciate it. You have a great weekend yourself, Sal.
Bye.
All right, there you guys have it. First expert done today. Unfortunately, we don't have another one, but I almost feel like rewinding that because it's so important to kind of keep on your radar right now. What's going on in the commodities? Do we see a topping? And of course, one thing to always keep in mind is when we do see a top in commodities, we do see sometimes a drastic pullback, but the question is, do we get back to those May highs? I know I will keep on watching the situation, and we'll go back to Sal when we have further updates. Let's continue going here. Let's get into some other headlines to touch. A lot going on in the market today. So let's go towards our next one. We already touched on Kohl's, so we're going to skip on to Kohl's. We're going to go into the FDA alert here. I think it's important to keep in mind what's going on in the COVID situation. I know that a lot of talk for a little while went kind of like completely off and you just weren't even hearing talks of COVID, but let's just stick with what I think is important about here in the stock-wise news, right? And so FDA officials, Mark, says that U.S. can authorize BA4 and 5 subvariants of base COVID-19 boosters without new clinical trial data. I think this is important because we saw earlier in the week the mention that we might need to actually get one of these kind of new vaccines for the new variants versus the old variants that were around. This should say that the U.S. should launch a wider campaign in fall 2022 to try to get as many people boosted as possible. This came from Reuters, something to definitely keep on watch. Let's take a look how Pfizer doing today. I know had a good day yesterday. It's catching a little bit of a bounce yesterday, but pulling back today. Let's take a look. I think this is definitely something you keep on your radar. But if you saw Pfizer, you also probably saw Moderna also. So mRNA. Look how this jumped today. This was one of those signals that I was looking for. So now you're seeing this kind of close. I talked about a close above 150 would be really bullish for Moderna. And now you're seeing it. A lot of bottoming actions on this chart. I'm going to keep this on radar because if we are going to maybe get some new boosters, we could see a lift in some of these biotech names. I definitely keep this one on watch. BNTX also, you can see here having a really bullish day. So keep this one on radar. This one had a really good week. If you take a look at it, since about Monday, you can see here, we're up about like 12%, 13% here. Not looking bad there in BNTX, a lot pointing towards the upside there. So keep this on your radar. I am seeing a nice little bottoming action. We'll see if it gets towards the 170, but something definitely to watch out and see how it develops. You know, are we going to get more of these boosters and are they going to come for the subvariant BA4 and 5? I think you got to keep these on your radar to see what happens, but will we go ahead and maybe kind of go up if we do get these? Yeah, I think it's something to definitely keep on your radar. All right, now let's go ahead. Let's keep going. You guys in the chat, let me know if what's getting you guys wild up a little bit. Do you guys watching the commodities market? Do you guys care about the COVID-19 vaccine boosters? Do you think these stocks are going to go up? Let me know. Throw up some comments in the chat. I'll catch them. All right, let's go ahead. Let's keep going towards the next topic. I want to touch some Chinese EV numbers. So the first one up is, of course, NIO. So let's go ahead. Let's take a look at NIO. Of course, earlier this week, we did get a short report by Grizzly Research on NIO, and you're going to see it. It's coming on down here, even though it delivered 12,961 vehicles last month. Its best total and its first result over 10,000 since December. So it's a good result here, but NIL still going down. I think some investors really did take some of that short report to heart. So if you missed that short report, maybe go back and kind of catch that, do some reading on it, keep your eyes on NIO. But if you wanted to take a look, also XPEV released their deliveries. Let's go ahead. Let's take a look there at XPIN. And you can see this one also retraced. So it looks like the industry all pulling back here. They delivered 15,295 vehicles to customers in June and up 133% from a year ago. We could also take a look at LI that did do a $2 billion offering earlier in the week. LI delivered 13,024 of its SUV last month, up 69% from a year ago. So good results there from LI. We'll see if these can kind of actually come back and push. But hey, we'll see what happens there. Happy mentioning that XPEV and LI did a lot better in deliveries. Yep, I do agree with that. Now, the big thing there is which one is going to continue leading, right? I've talked about these before. From what I've seen, at least from my charting and what you guys can do to kind of check this out, is I recommend you put these on top of each other. right? If you put these on top of each other and you compare them, you're going to see that one leads and lags. That's what I like to pay attention to. I like to pay attention to not the one that's in the middle, the one that's on the lagging side, and the leader. A lot of times NIO leads, XPEV in the middle, and LI lags. So why did this happen? I'm not so certain on that. I can't explain that. But is it a pattern that I see? Yeah, I tell you to check it out for yourself. All right, let's go ahead. Let's keep going. The Save saga continues. We'll see what happens next week, but Save is actually up pretty decent amount after talking about on Wednesday that they postponed the CARE shareholder meeting after a battle with Frontier and JetBlue has continued, right? But if we take a look at Save, it's actually showing me a little bit of strength here. We'll see if this can continue today, but not a bad day there for Save Airlines. And I think this is one thing to keep on watch. There's going to be a battle. I personally think JetBlue gets it, and then the Frontier deal doesn't go through. But who knows? I don't think anyone does. All right, let's keep going here. Smash the like, guys. We got over 120 people watching right now. Do me the favor, guys. Smash the thumbs on up. Let's get it going here. I want to see if we can get to 100 likes today. Can we do it? Let me know if you guys are enjoying me going through all these headlines and getting to expert opinions. Let's continue going. There's not much left here. We're going to get into a little bit more time where we do some ticker time today. We don't have a second guest today, but hey, that happens. It's July 4th. I know some people are taking a little bit of vacation time, and you can't blame them. I probably should have done so myself, but I'm here with you guys battling right here on Stock Market Movers. So let's go towards the next topic. I do want to talk about what happened in GM. Let's take a look here at General Motors. General Motors coming out in the morning, and for a second there, they were halted pending news. This brought some concerns immediately. You guys can see here on the chart here, it did try to bounce at the gates there. Now it's holding sideways, so we'll see what happens on this one. Did come down right as that news came out and then recovered some. Now we're kind of sideways here. They did full year reaffirm our net income guidance range between 9.6 billion and 11.2. EBITDA adjusted guidance range between 13 billion and 15 billion. Now, some of the negative comments that they mentioned, of course, they mentioned that during the second quarter, vehicle wholesale volumes were impacted by the timing of certain semiconductor shipments and other supply chain disruptions. This is not the first time we hear about supply chain disruptions. Tesla gave the red flag. Toyota gave the red flag about what supply disruptions, and what else did they mention? They mentioned that there was some shortages in materials there. They didn't mention specifically semiconductors, but it's just one of those things that it kind of leads like a stair step, right? First it was Toyota, then it was Tesla, now it's GM. Who's not to say that Ford doesn't come right behind them and do the same? All right, we'll keep this one on radar. Of course, also GM saying that in the 3 months ended in June 30th, expects net income to be in the range of 1.6 to 1.9. They also kind of gave some other negative kind of news here about that 95,000 vehicles in our inventory were manufactured without certain components. I think this is definitely important to kind of keep watch. What do they do now to kind of fill that in there, and how long will that take? So what are we going to see from GM coming up in the next quarter? Of course, this is all leading to more and more what signs of concerns for recession. I think this is definitely something to keep on watch. We'll do a little bit of more of a deep dive, but as kind of mentioned earlier today, and you guys can keep on watch there. One thing that I kind of look at is the Federal Reserve's GDP Now tracker. And now this is pointing to a 1% decline. And if we do get a contraction of GDP again, this would be the second quarter of contraction of GDP. Essentially, what some would say, yes, recession, recession, recession. I think that there's a battle on out there right now, and we've talked about it with different analysts, is where are we leading to, right? Are we leading to recession? Will we have a soft landing, or are we just going to have a massive slowdown and we're heading into more of a depression time? I mean, I don't want to bring it up, but there are concerns out there for depression. I mean, I think we need to keep all on our radar to see what happens with inflation first. Do we see it start peaking? Because if it can peak, maybe we can start kind of addressing the different areas. Of course, the Fed can address the interest rates, but they can't affect energy and food right now. They can try to go at it in different ways. But if we do start seeing the topping on there, and they're working on the supply side of money, you know, working on that interest rates and selling off some of the assets, we could eventually see kind of a turnaround here and also a boom back, right? And so I think that we need to kind of keep all eyes on the Fed at the next meeting that's going to come on in here in July. And I think that's one thing to keep on watch is the inflation number, the CPI data, right? Is CPI going to come in hot, or is it going to come in low again? If we take a look at when CPI is taken, it's usually taken in the first couple of weeks. And what happened there is that in June, the price leakage and the price coming down was actually towards the end of the month. So we could not see that show up in the CPI report until potentially August report. So that's when I'm going to really start saying that we could see a turnaround. I'm going to still be in the camp that, you know, we're on a downturn right now, but I do start seeing that potentially going into late Q3, we could get a quick turnaround and maybe a little pushback here in the SPY. The question is, will we get the numbers that some people are saying? I mean, some people are saying a move back on up here, and we can take a look at the SPY, that it would go back here towards, let's say, 4,300s and higher than that. I mean, I don't know if we're going to be able to get back on up there, but I can tell you that we had some more volume coming in, of course, with the window dressing yesterday. We're having a bullish day, and we need to keep on watch to see if inflation tops out and the Fed goes from what? From being super hawkish to dovish. That's what we need to keep on watch. Do they all of a sudden start saying, well, you know, we're starting to see inflation head our direction, and we're seeing signs that we're heading to 2%. So we're going to actually not do a 75 basis point hike rate, but do a 50 basis point hike rate. That right there could even get it started here. So I think we need to all keep this on our radar, keep watch, and of course be what? Data dependent, just like the Fed. But one of the things to keep on watch is that the Fed a lot of the times is going to lag. And by the time they realize that they want to probably cut rates, by that time, it could be way too late. So I think what we all need to do is kind of just watch the technicals, looking at things like market breadth to see if we actually start seeing a rally. Another thing to keep on mind is, do we get further revisions? We talked about it with the earnings. Do we get revisions to the downside? Because that could continue the bear market and continue pushing us in the wrong direction. All right, time to catch up with the chat. What's up out there, guys? What are you guys taking a look at? Yes, sir, 4,400 by the end of the year. Hey, it looks like I'm not the only one probably mentioning that. What else is being mentioned in the chat? Mitch, you're the best, and I appreciate all you do for us. Hey, that's what it's all about, man. Keep getting that money. I'm here for you guys to try to get the informational edge and any way that I can help you guys move forward. All right, let's keep going. What else is being mentioned in the chat? What are you guys taking a look at? All right, looks like someone's mentioning NVIDIA here. So what are you guys? I'll throw it up to the chat. Looks like we got a couple people in here. I'll put a 1 if you feel we're going into a recession, and put a 2 if you feel we're not going in a recession, and put a 3 if you feel we will close at all-time highs. We're just going to rip right back. Let me know what you guys think in the chat. All right, let's go ahead. Let's take a look here at NVIDIA. Someone wanted to take a look at. I got no problem with that. Let's go ahead and do so. All right, NVIDIA coming down there towards 144, really breaking here, coming right back through the lows here of May 12th. And man, we cracked it. I talk about this all the time. We're looking for 2 or 3 bottoms, and on that 4th bottom for it not to crack here. And that's exactly what we got here. It cracked right there. You guys can see bottoming action, bottoming action, bottoming action. And then on that attempt of the fourth breakdown, we don't want to see it break down. This day closed above that line, giving us a little signal that we could come on up. But as you can see here on Thursday, we started cracking that and showing more weakness. All right, I see the chat here coming on in. All right, let's see here. I see some ones. I see some ones for recession. 4 already in a recession, says Jonathan. So he's in the 1 camp also, but I'll count him as a 4. Happy also. I mean, there's only 1, 2 here. Oof. It's kind of troublesome that there's only 1, 2. And one thing that I didn't see is any 3s. So no one's seeing that we're going back to all-time highs. And can't blame you for that outlook. All right, let's go ahead. Let's take a look at other stocks that have been really declining hard. I mean, AMD, man, this in 1 week has come down almost in its own bear market here. A lot of people refer like 20% down. And for the week, AMD is down. We're down about 15, 16% here. So definitely not what you wanted to see in AMD. And where's the next levels? I think that's important to understand. The next levels are down towards 58 and 60. So if AMD can get down there, I'm going to start getting interested here in some AMD. I have no problem with maybe taking AMD on a long-term 200-day moving average coming into play on the weekly. On the daily, you can see the 200. It's way above there. And so maybe we want to watch something a little closer, like the 9, show us a little scoop underneath. Again, you can see it's on the upside. We want to see something where it starts showing up like this, where the 9 is trying to go underneath the price action. Right now, it's above it, showing me more and more weakness. All right, what do you think about BA? Oh, man, BA, Boeing. Boeing has a lot of resistance here. Needs to come back. For me, I don't like Boeing, but I've mentioned this before. I think they're not with the company that they used to be. I think this is a company that could take out eventually pandemic lows, get below 100, and then never come back above 100. Yes, I said it. I think that this company isn't what it used to be, but I could be completely wrong here, and you can have another mentality. But for me, it just has a lot of resistance above it, and it keeps failing around here, around the 140.55s. So keep that one on your radar around the 140.55. If it can hold above there, let's say close above 141, it'll be looking a little bit better. But for right now, definitely rejecting anywhere to get back above these levels. Looks like we have a wick right here that we can go off that looks a little cleaner. It's around the 141 level. So you don't want to see it back and closing back of 141 if you're kind of bearish. But if you're bullish, that's where you want to see it close back above that 141 going to 142. Never. No worries. I just don't know. Honestly, I'm looking at a short on the hourly. Let's take a look at the hourly. It's not a bad one to keep on watch. So if I was trying to attack this on the hourly, I would see what? Downside action, right? Downside action, and move back up. So that's down 1, up 1, right? Down 2. Up 2. I'm just going to grab this line here. It's a retracement, but let me just delete it here. Up 2. Now you got in kind of this down action. You went on up and kind of faked up for a breakout. That's actually a good look, because if you start seeing closing below this line, you could actually start using that as resistance and then see it just crush down there, right? So the bulls will want this to close up there 142. And the bears, where will they be looking at this? Well, the bears will look for this line to crack here. So if this line cracks over here and it starts going towards the 134s and the 130s, that's where I could see the downside come right back to it towards 114. But like always, choose your own levels and choose your own investment advice and risk level. There, to me, I would be looking for really hard down action towards 134, another rejection maybe to go towards 141, and then seeing that big red bar coming on into play. You get that ham sandwich out there. All right, guys. Is there any other ticket you guys want me to touch here? Looks like PSNY. Polestar. You liking the Polestar? Well, I can see the squeeze, but the question is long term. What is Polestar to me? I think in the long term, it's nothing that I would want to be long. But could I play it on the short term? Yeah, I think we could. You guys are seeing it bounce off a bottoming here around the 874. I would let this continue going and try to pull back right now because it's just a little bit extended here. You could take a look here. Every time it's pulling back here, it extends. It pulls back to the 9. It extends. I'd look for pulling back towards the 9 EMA to continue holding. It is having a great day, though, today. Polestar Automotive, PSNY. All right, what's going on here? You're a big Volvo fan. Can't blame you for being a Volvo fan. Volvos are nice. My big thing is with Polestar is there's so much competition in EV, and that's going to be hard to get around, right? When all these EVs come out, what is going to take over? You're going to need some competitive advantage. Either that or you're going to need some kind of cult-like background, kind of like what you see in Lucid. Let's take a look at Lucid today. Lucid down there to 1680. You guys know how I'm bearish on this one. I've been looking for this one to keep coming on down. I'm going to look for one more bounce. I've made the most money, at least on any trade this year, for a short. So I can see here kind of the action similar to like what you're seeing in BA. I'm actually looking for one more bounce back, something up here towards, let's say, 1850. And then I'm going to look to try to tackle this one down, further down towards 13 and maybe even 10 in the long run. All right, that's going to do it for me, guys. It is going to go ahead and wrap on up, bring you guys on over to none other than Moon or Bust, where they covered the cryptocurrency markets. If you guys have been watching the cryptocurrency markets, I have been talking about some of the catalysts that have been going on right here. It's something that's on my radar. I'm looking for a pullback, right? I'm looking for that retracement level here going into around 10,000. You guys probably have been looking at some other levels, but that's what I'm watching. Once we get down to that, I'm going to start dipping my toes in. I've been looking at also different kind of NFTs that I want. And yes, I said it. I want some NFTs. There's nothing wrong with that. The key is always understanding when you're going into risky assets, how can I go ahead and apply some of my portfolio to give me a range to make some money, but also not so much in my portfolio where it's going to crush me if it doesn't come true. Like always, you never know. One thing I will keep doing is always trying to expand the knowledge. If you guys appreciated the knowledge that you guys got from Stock Market Movers today, smash the thumbs on up and we'll go ahead and wrap it on up here. We'll see you guys like always right here on Benzinga. Catch me on At the Close with Joel Conan later on today as we wrap up the markets and see what was moving today. Hit the like button on your way on out. I've been seeing a lot of battling on out there. So I think one of the biggest things that I'll recommend is have a great weekend, get some togetherness, keep battling to try to improve your skills. And right here on Stock Market Movers, what will we do? We will go ahead and continue getting through the headlines and, of course, getting you those 2 expert opinions daily. That's what I'm trying to do. Set that with you guys. You guys come on in 1 p.m. Eastern daily. Come check this on out. And I hope you guys enjoyed today's show. Just to kind of remind what we touched today, let's get into that. A little bit of a recap. We touched the ISM Manufacturing Index, construction spending, Micron, Kohl's, Meta, FDA, earnings coming on up, and of course, recession concerns that are on out there. We also got into it at 1:15 with Sal Gilbertie, president and founder and CEO of Teucrium. I knew I was going to have a little issue on this one. Let's go back to it. Sal Gilbertie, president and founder, CEO of Teucrium Trading, where you guys can check out ETFs like corn, soybean, wheat. Corn, I thought that was like, how can you get a better name than that? Wheat and soybean. Check these on out, guys. You guys have been seeing the retrace. Will these bounce back? Something to definitely keep your radar on there. So we'll see how the commodities are able to bounce back. Oil. definitely getting hit on today. You're seeing continued downside action in oil names. You guys can kind of call it how you want to see it, but XOM is coming on back here. We'll see if this can kind of get on back into the green here and close the day green. But man, it was just a washout at the open. We'll see if energy can bounce on back. That's going to do it for us today on Stock Market Movers. Hit the bottom and let me know in the comments, what do you want to see next week so I make improvements to the show, and we'll see you next time right here on Benzinga. Stay tuned, guys. You guys will get some crypto action, and then after that, we'll go ahead and get into, of course, at the close. All right, stay tuned, guys, and keep it coming.